Hello everyone, my name is Moji. You're watching a Bitcoin Bubble News channel? Yes, that is true if we look at the 4-year cycle, right? We have time on our side. In other words, we could stay in the same place for another 6 months and still be on track for the next 4 years. But I think that after the summer, we might see another high in the fall. That would be proof that it's not over, and I believe people will feel hopeful again. A famous Bitcoin on-chain and cycle expert has said that the smart thing to do is a very positive view of Bitcoin backed up by charts that show it will do well in the future. In his most recent prediction, he said that Bitcoin would follow a cycle that lasted 4 years. He also said that the market might stay flat for another 6 months without moving from this cycle. He thinks that a new all-time high will happen right after the summer, which will make the market hopeful again. Recently, a lot of money has been leaving Bitcoin ETF, and it's mostly been small investors rather than companies. Even though money is leaving the market, the rational route is still optimistic because the general growth rate of ETF inflows is much higher than the rate at which Bitcoin is being issued. Even though prices have changed recently, a Cointelegraph story shares this optimism. As of July 4th, Bitcoin's price had dropped by 3.34% in the previous 24 hours and 5.82% in the previous week. It had reached a 1-month low of $1.56,700 and was below the important $60,000 support level. This drop had an effect on the whole crypto market. The total market capitalization dropped by 4.23% to $2.13 trillion, and trade volume went up a lot, which shows that there was a lot of selling going on. Analysts say that Bitcoin's current 22% drop, which will last for about 4 to 5 days, is a little above average but not uncommon. They point out that testing the 200-day EMA again has previously shown a bottom range, which could mean that a big upward breakout is about to happen. The Wyckoff reaccumulation method backs this up, which means that the current decline could lead to a big price rise. To put it another way, hold on because Bitcoin is likely to go back up soon. I'm still interested in the growth rate of those ETFs because I believe they are a major reason for the bull market. We can see that we are currently getting about $2,000 a day. That's still 4 times the amount of new money that was made, right? Yes, since the splitting and the 2.1 thousand. The average number of days they've been open is great, but since the recent spike, it seems a bit more even. Yes, so we had a lot of first flows. In the beginning, we were able to get about 4,000 Bitcoin every day, but it's clear that this isn't much information. That has now gone down to 2,000 per day, and it might go even lower. Really, we could go up to 1,000 Bitcoin per day. That wouldn't be strange. The amount is only 450 Bitcoin per day, so I still think we will stay above it. What about the futures market, though? Because Checkmate talks a lot about the carry trade and cash trade, which are both ways to short the futures market. I don't look at futures as much as Checkmate does. There is, however, a 10% spread on the cash and carry trade, which we have because of this. It's already less than that. People are given incentives. It is called arbitrage to get the spot price of Bitcoin and the futures market price to be the same. You can use the cash and carry deal for a short time, but after that, the price will be more like the spot price. The spread gets smaller because of this. But people want to get a picture of that spread, so this trade in cash and carry is what they do. In fact, though, this effect on the markets is pretty neutral. The futures market is not to be seen. Of course, you can, since there is talk of paper Bitcoin. You can pretty much gamble on Bitcoin with USD, just like in the futures market, right? Without any real Bitcoin, you can either short or go long. In that way, it could be thought of as Bitcoin on paper. However, I still believe that the size is not that big at this time. Of course, it's a little bigger and has a bigger effect sometimes than other times. And there was a 10% difference between the futures price and the real price of Bitcoin not long ago. So, yes, it does have a little more of an effect at those times, but when that ends, the market will be back to normal. The Bitcoin trends are what I want to talk about now. I agree that it would be helpful to give a little more information. I think I've learned more about these cycles than anyone else, so I put them in this order just to get a better idea. But in general, we move from the most hopeful to the most pessimistic alignment. So from the last high to having gone through a 4-year loop. So we went from being hopeful to being more cautious. However, I chose to read these one by one, because, well, we had a new all-time high, and in the past, there was always a bull market when we hit an all-time high. There was always a bull market after it. Cycle analysis has a flaw. Bitcoin moves in cycles, and it's cool to see how these cycles compare to each other. What is the best way to align it, though? So we can try to line them up with pretty much any point in time. So the question is, what is the best way to line things up? What should we do there? In the past, as I said, when the stock market hit an all-time high, a bull market would follow. So it makes sense to look at the cycles that began at the all-time high point after you reach it. We did have a quiet top in 2021 though, as I said. But we're 6 months early, at least in terms of the 4-year cycle. This ETF caused us to reach an all-time high. In this case, it's clear that the alignment from the previous all-time high is not the best alignment. If you look at the red line, that's the current cycle. You'll see that we've already fallen below all of the other cycles and have been basically stabilizing for a long time. It was also clear to me because I also thought that when we hit the first all-time high, the bull market could really continue. But then the flow stopped, which is why I was keeping an eye on the flows. And we saw this coming together. Then it took a little longer, and I already told my readers, okay, this isn't the best chart to be looking at because it looks like this is going to take a long time and it's not the best alignment right now. So we also talked about the ETF approval and the half cycle on our last show. Because the ETF was a bigger driver in this cycle than the halving, we could also choose to line up the cycles by the halving for all previous cycles. But for this cycle, we chose to take the ETF approval, which led to the picture you see there. So the ETF approval plus the cycle agreement of halving. We're still pretty much on track with that. I still think that the 4-year cycle might be the best agreement to look at for now though. That's why the next alignment is the half cycle. So for each cycle, we just take the halves. This is a well-known arrangement that most people have seen on Twitter. But if we look at the 4-year cycle, we can really see that all bull markets line up. What's cool about the 4-year cycle is that it also takes trends into account. Because the summers stay in the same place, you can also see the cycles. So I think the 4-year cycle, which will also be the last cycle in 2020, is a good one. A lot of people wanted cycles to be longer, super cycles and other things, but in the end we went back to the 4-year cycle. So the cycle of 4 years has always been stable and it looks like it is doing that again now. Also, we mostly talked about the horizontal alignment so far. For the vertical alignment, we can also start at any point we choose, like the COVID crash, which shows a big drop. So when you try to measure the percentage gains of each cycle, the results are a little off. So I like to use the realized price, which is the average price at which Bitcoin was bought. This is shown by the dotted lines. They are the same color for each turn, so you can see them. That's the average price at which Bitcoin can be bought. That's a better tool to use as a vertical alignment too because it takes away some of that instability. By using that alignment, we can also see that the ETFs caused our prices to be too high. We can see from this picture that we're higher above that dashed line than we were in any other cycle. And that was clearly because we had ETFs which were the spark. So now we're falling back into the normal routine of every 4 years. So I don't think it's strange to have a consolidation that lasts longer than normal.